Okay, welcome traders to Trade Setup and the live stream for the 23rd of the 3rd, 23rd of March. There you go. Not a bad night overnight, so we'll have a bit of a chat about that in a minute. But thought there might have been some continuation of the previous nights, which was a massive sell-off. But a lot of the times you don't get too much; you get more bargain hunting jumping in. So we'll have to see how it all plays out tonight. But we'll go over that in just a minute. I hope we're all doing well. We'll just go over the normal housekeeping. For anyone that's new, you can just join us on TradeSetup. Sorry, you can join us on Twitter, top left-hand corner. Link into us on Facebook, or down the bottom right-hand corner, you've got our YouTube channel. So you can just subscribe to that, and you'll get alerts every time we go live on something. Also, just a general advice warning, we don't give specific advice at all. So just take note of that general advice warning. So anything we chat about is just our views and opinions, and maybe opinions of others, if we steal them anyway. All right, well, let's get into it. Just today we're going to go over, obviously we'll take a more in-depth look at the ASX. So I just want to discuss that a bit, the actual underlying index, and just to see, people's opinions, obviously, and just go over what we see happening. I've been talking it up a bit of late, and it's popping high, but I know this is probably, it's about this stage when people get a bit nervous when the market's had a big down day, all the bears come rushing back in, and then there is potential for them to get caught, and they do it time and time again. So I just want to reiterate what we've spoken about in the past. Sitting on the fence, trying to view it from a trying to view the markets from a neutral position, not trying to anticipate which way it's going. Just wait until everything, the market or whatever you look at is telling you to do something, then do it. Otherwise, just keep plugging away whichever way the bias is. So we'll go through the ASX in a bit more depth in just a minute, and we're just going to go through a couple of currencies. We're starting to do I've only done two videos on the FX review, so I just want to go through weekly and just click over some of the currencies that we're looking at, mainly hourly charts, probably 4 hourly or something like that, but just clicking over a few major currencies that, or anything that we see as a possible opportunity. It's unlike with our app on the stocks, we're not giving levels to buy as such, but we're giving directions, and essentially if anyone's been in here for a while, you'll know that what we're looking for, lower highs, higher lows, things like that. And we've spoken about it a bit in the past too on the pound. Get people getting squeezed out either side, so there's a reasons why we're thinking it's going up or down. So those videos, there's 2 uploaded now to the YouTube channel that you can have a look at. So if you do have a bit of a look through them and you do like what you see, just leave us a like at the end. And also leave us a like at the end of the stream if you can. That'd be much appreciated. And if you've got any ideas what you want to look at with regards to currencies, just send an email to support@tradesetup.com.au, and we'll take a look at those. So let's get into it. How are we all doing today anyway? Sorry, I'll just click over so you can actually see my pretty face. And yes, it's debatable, I guess. Excuse me. All right. That should be there, shouldn't it? All right. Excuse me. So, what am I doing here? Yeah, just want to make sure we're all up and running. All right, so how are we going, guys? We having a bit of a dabble in the market at the moment, or we're most people are standing aside. I did get belted yesterday. I thought it was a bit overcooked, but what we'll go through in a minute, you'll see that there was a support level down there. It's mainly hidden on the futures market, or the CFDs mainly touched down on it. The ASX missed it by a few points, but it seems to be that's what they were targeting. And anytime you know that the US is down quite a bit, you know that the retail traders, when they jump into the market and then just run for cover, all your bears are going to be the first ones out. They're going to be the first one diving into shorts potentially. And that's what it looks like happened yesterday. Just continued on with it. So when the market's in a move down like that, there's no reason to sit there and stop it. Even if you're thinking about buying, if you're a bigger fund or whatever, you wouldn't bother fighting it. You just wait till it pulls back to a decent level and then start edging away back into some positions that you wanted. So, we saw a good sell-off yesterday, and we're still holding trend. Technically, we're still holding trend up. Nothing's broken at the moment, so we'll go through that in just a second. But looks like there's a bit. We're only up 7 points at the moment. We were up as high as just 10 on the open, and again, that could be bargain hunting. We don't know. But yeah, the banks they're down a bit at the moment. We've got a few others. A few of our alerts, our positions didn't take a big hit yesterday. Overall, the portfolio was down. I'd like to say bugger all without being rude, but not much. It didn't take much of a shock to the downside, which I know that a lot of people could have if you're weighted too heavily into one area. So it's looking okay, and it's all a lot of it's bounced back again today. So it's a bit of really toing and froing on that. What we'll go through now. What's everyone's opinion on the ASX? Just before we get started, before we have a look at it. I'm just wondering what would you prefer? Just to quickly go over the currencies, what we're looking at. We'll go over that, and then we'll get into the ASX, and then we'll go into some stocks. So, just if you can, just whack up your view. Just whack it in the chat. I just want to see different opinions and what sort of levels you're looking at. Just before we jump in, what I'll do, here's the ASX here. This is the actual physical. What I'll do in a second is mark up the levels on the CFD, only because the charting's a bit better. I can't actually draw lines on this package here. It's just more of a data package. So you can see it's pretty clear what's happening. We've got a bit of resistance up at 58.27. We've been speaking about this for a while. The market popped its head above 5,800 just a few days ago, really. What would that have been? What are we now? Thursday, Wednesday, Tuesday, Monday. It was Friday. So it popped its head above 58 on Friday, and then it's pretty much sold off all of this week and had a big night last night. Really, the key level is 56.75. Look, I take that back. It's not a key level as such. This is a daily chart. It's not a key level, but it just is a level where we're potentially going to get some reaction off. And with that big move down, there's probably going to be people that bailed yesterday. With the trend still hasn't changed. This could just be a bit of consolidation, a bit of contraction lower. You don't know. So until the market actually tells us different, we're biased up still. And I'll show you what I'm looking at it just in a minute. I've got it marked up on a daily chart. But really the key levels, the one we spoke about before, remember if you do remember at that stage, we're looking at that pullback here, excuse me, and then we started getting that bounce back, and then we got a retest, and as soon as we got that flush out of 5,600, that's probably stopped in a few people, or stopped out a few people, and then it's just gone straight back up. You had a couple of solid green days there, all the way back up to retest those highs at 58.27. It's had a bit of a pullback, and it was looking good there, but this could just be a bit of steam coming out of the market and a bit of consolidation before it starts building for another move, another leg up, or just continuation of this overall leg up. At the moment, it's not. We're not. Nothing. No one should be running for cover just at the moment. They get bounced today, looking for pretty much Wayne. It's probably a bit of bargain hunting, people jumping in. I don't know if the volume's very high or very low at the moment, but there'd be a few little bargain hunters jumping in at the moment. But it'd be interesting to see what happens from here, whether we just consolidate in here and start pushing back up, or we build a lower high. If we build a lower high, if we go through this 56.75, I think that's where not so much concerned. It could easily flush it out, pull back a bit, and then start building for a leg up, or it could just build it straight above this level, 56.75. Or if because this is, you get that sort of price and action up, it's not too strong. You wanted, if you're really, how am I saying? If you're really positive on this market, you would expect it to flush out these highs and then build back into the range and then go. But it didn't. It's actually built a minor lower high. But until we get through this 5,600, that's not confirmed. The anchor, this is the anchor to the trend up. We have just made a double top. We are potentially making a lower high just in here for a correction lower, but we just have to see how it plays out. I think everyone, obviously the biggest news is what's happening in the US with, the healthcare, trying to get their bill through, government or parliament, whatever you call it, and they're getting held back, and that's obviously putting tax reforms on hold, and that's the whole reason why we've gone so hard in the US, and we followed suit here. Not as hard, obviously, but the US is breaking all-time highs because there's tax reform. So, and I read a stat today, something about on the S&P, if you're buying into the market now, they reckon it's quite overvalued. If for every $18 you buy, you get $1 return potentially, and it hasn't been at those levels as high overvalued at those levels. $18 something. I think that was on the S&P. It hasn't been there since 2004. So it's quite, when you look at it in that respect, since 2004, what's that, 13 years, we haven't been this overvalued, or the US hasn't been this overvalued. So you've got to put everything in perspective. If it has gone hard, one, if the tax reforms take too long, people are going to get bored and sick of it, and they're going to put their book gains. There's only so long you can hold on to gains without wanting to book it or feeling the temptation to actually book some of those gains if you've been in the market for a while. And two, I mean, even if they come out with those tax reforms, has it been well and truly factored in or not? I just think there's too many. I think it has to come back to value. We have to get a bit of a pullback in the US to get back to value. I don't see anything major happening where the thing's going to topple over and we've got another bear market and what the bears would lead you to believe. But I think the US is a bit overextended. It'll probably have to come back to value, which means that we're probably going to have a bit of a pullback and correction as well. But I still think the longer term weekly trend will hold, and they just have a bit of a pullback, flush a few people out, get a few people back on the sidelines to make for fuel to rally again. That's what it does. The market does it in every individual stock. It does it in every product. Flush, rinse, and repeat. It just it's got to get people back on the sidelines. It needs fuel. If there's only 100 people trading, they're all based in the market. Who's going to push it higher? So you have to remember that type of thing. And they've just got to flush a few people out, I think, because it's overextended. So we'll see how it goes. I guess that's a bit of a rant. But what I'll quickly do now, before we get into it too much, I'm just going to go through. Actually, no, we'll go straight to the... Let's just click it over to the ASX. Just take a look. So this is a 30-minute chart. The thing with the 30-minute chart, it has pulled back down to that. That's the level, so roughly the 56.75. Okay, a touchdown on support. The ASX missed it by a few points, and that was... it was just after... So it touched it down on 4. So that's driven mainly by the futures market. It's trying to correlate with the actual underlying ASX200. But it's mainly driven by the futures market, so they drove it down to support, which has hit there. The ASX is generally down around the same level as well. We've got that bit of a contraction back off it. What you can see, that was probably warranted. The market was just borderline overbought at that time, so it can easily just have a bit of a pullback and go and get and rally back up again. And just to contract its way back in, it's got a lot of room to move, really. 57.80 is that key level from yesterday, holding this market down. So there's no reason why it can't hold this little recent short-term trend down, contract back in, build another major lower high, say potentially around this level, 57.50, just holding that trend down and then roll over again from there. But then there it'd be interesting, if that's the case, it'd be interesting to see where this level can hold up. And we build, we just start contracting from there, building major high lows and lower highs also, just to contract in. And that would lead me to believe we're going to start washing out and start taking out traders, any short traders that have been built up, excuse me, and just start moving back up again. Otherwise, this market could easily just from here, build a little minor lower high here and extend through 56.75. And just be wary of that, because it could be a bit of what we saw back here. It's building that lower high. Traders who get nervous, all the bears, it's extended through a support level, which is a pretty clear, obvious support level. Flushed them out and just gone on from it, rallied from there. It could do a bit of the same. This could be on a more longer term basis, maybe the daily. Bit of contraction up, flush that level out, and then go and just do the same type of thing and just catch everyone off guard, and up she goes. Otherwise, this is what I'm talking about, I guess. Being on the fence, just making sure you haven't got any bias, long or short, to the market. I know I've talked about it going long, but I know what I want to see. And it's just keeping that in the back of your head. If you start seeing some sort of price patterns build, then you've got a bias, whether you want to be still biased up or whether you really seriously think about cutting back on your exposure to the market. Or even putting on a few shorts. We've got one, what do we got now? AMP. It looks short, so it's worth having a go at, because if the market does roll over, that's probably going to go with it, because it actually looks pretty weak. If it doesn't, if the market kicks on with it, that may not do anything, so be it. And if it does go short, we may not get much out of it, but that doesn't matter too much. It's more of a bit of a hedge, or just take an opportunity to take some of that downside. But we'll just have to see how it goes. Again, like I said, just sit on the fence and just try to assess the market day by day as it plays out. Don't try to get biased to, if it's pulling back here, don't say, okay, I'm just going to see it's a better buying opportunity and go from there. because it just may not drag you in and then wash you back out again as it heads lower and has a deeper correction. So does that all make sense, guys? And we're getting a bit extended. Just see this move down on the stochastics. I have to keep moving my head out of the way of my big ass buddy. Sorry about that. Big ass microphone. But you can see it's made a higher low potentially, and it is, the sellers have been putting pressure down, and it's getting soaked up a bit, around that 56.87 zone, just in here. You can see that. Just in here, you can see that it's getting a bit, getting soaked up a bit, and it's starting to show signs of actually holding this as a higher low, and then you'd expect it to get up through 57.06 and just work its way back up. And I'd say potentially we're going to get back up, somewhere around here. I don't know. We just see somewhere sort of in that zone before we potentially have a major lower high, and that's where you'll find all the shorts will start stacking up again, start jumping in. But if it can't get through, if it starts squeezing, like I said, contracting, if we can just draw that up, potentially something like that, starts squeezing in, then and starts holding a major high low, then I think you'd be fairly confident to just start looking for buys again in the stock market. But anyway, I just want to go over quickly the daily chart. Now, this is what we've been looking at, something like this anyway. I can't remember what I sent out recently, but this here, if you go back to a weekly chart, let's just go back on here. If I'm getting the right levels, yeah. So you can see it's had a good, this here's, start right from left to right. If you can see that mouse, yep. So we've had a bit of a push up. We got to around 5,000. It's retested. It made a minor lower high. It's contracted lower, took out the lows. And generally you get a lower high, it washes out the most recent high low like it did, so it's all working to a T, and it started lifting again. And this is what potentially could happen. I said it's contracting higher, rolls over, you get the shorts jump back in, but it just holds an inside level and then starts going again. So you've got that contraction, and then we've got this big long-term expansion where it's just gone up from a good part of 2.5 years, 2012 to start of 2015, had a good long push higher. And then we've gone and contracted because we've just taken out, at this stage here, took out this low, somewhere around 5,200, just below that, 51.50. Took out the low, contracted lower, and potentially we're in the midst of actually, excuse me, pushing back up again. So if we go back to that other chart, so that's what this leg is. That's contraction lower, and we've had a major double bottom on the weekly basis. I think on the ASX we didn't actually wash it out, but look, we may or may not have. This little washout here, which has led to another move higher. So we're potentially, one longer term off the weekly chart, one longer term leg high, but you can break that down, like I said, into daily legs. And what we were looking at, right, we're sort of targeting that 6,000 just at the moment. So you can see this leg up here from one up to this top, and then we've got that contract, really just retesting the anchor. That's a good, when you got the lower high, a washout down to that 50-50 zone. We say that's one leg up. If you just project that out from that 50-50, that's taken us up towards 59.20, say. Now, the reason why I'm happy to say around 6,000, because a lot of the times they actually blow out a bit, even if the market's getting a bit extended, it may just push up. If that's our rough target zone, because it's so close to a resistance level, it could easily blow it out. Market can have a quick run up to 6,000, then start rolling over from there. So that's why we're sort of still targeting, because this, we'll call it a volatility projection, higher. And that's what's sort of given this range, say somewhere around 59.20 to 6,000. But I'm betting if it's going to head up strong, it's going to take out that 59.20. It's going to actually test up towards 6,000. The even pop its head through and then pull back. So that's why we're looking at it. You can see those legs all adding up quite nicely. So this is the daily chart. Excuse me. And you can see, when you just break it down, it's pretty much what we're saying. This leg is still not over until really we get through that. That's the key level there. If we are struggling a bit, we can just contract and start building. If you start seeing some high lows, we might wash out this level, hold a high low, and then go. That's going to take us up to 6,000. At the moment, we're not obviously going up. We're just really consolidating. Still holding the trend, so it's just really just looking down to the shorter term time frames to see some sort of example or some price action that's given us confidence to jump back in again, or having a bit of a go at it. Does that make sense, guys, what we're looking at and why? If obviously the market pulls down and pushes through 5,600, and it's got to be more than just a few points, then we've got probably a longer term problem, and we may be building, if you just go right back, a major lower high here compared to that 6,000 mark. So up until then, if we don't see that, then we'll just assess it as we go. So it looks like my phone's having a bit of a hissy fit here. All right. So that's roughly it on the ASX. Has anyone got a differing view, a bull view or a bear view? Or do you sort of agree with me? It's a nice little idea just to stay neutral and try to keep yourself neutral. Just so you've got your eyes wide open for any structural move down or structural move up, and just trying to take advantage of that while I have a sip of my coffee. Otherwise, what we'll do... And I'm just waiting for the thing to catch up. No real questions. Okay. If you have got a question, just pop it in. We can always come back to it. That's fine. What I'll do is just go through the couple of those currencies that I mentioned. So on the currency review, we'll start off with the Aussie. We've spoken about the Aussie. So I've done 2 videos so far. I actually uploaded the second one before the first one, if that makes sense. The first one was really a test. I'm trying to use Camtasia, so trying to get my head around it was a bit of a test. So I've uploaded that today, and I uploaded the second one in the series so far yesterday. But what we spoke about first was this Aussie. If anyone's had a look at it, just let us know and see what you think. What we're looking at, we know from this Aussie, we know there's a good little support base at 75. And at that stage, we're looking at somewhere around here. I don't know if it was just touching on the resistance or it was somewhere around this zone. What we're looking for is that higher low, and we did get that. Purely, we're looking at it for that respect because we know from what we look at, and like I said, our proprietary signals, is that there's quite a few short sellers built up. So I really like the idea when you've got a few shorts built up, you know there's going to be a few, if it's going to work out, it's going to work out quite hard and fast, and you're going to see it. You're not going to need much time for confirmation. And as we can see, that's actually played out quite nicely. It's squeezed out all the shorts and it's popped its head up. And at this stage, we can see it holding that high low, but you can see it's actually quite extended. And we sort of look at that from the MAs when it's had a bit of contraction lower, but the MAs are quite, they're quite wide apart, and they've had a nice steep rally. And it is getting a bit overbought just in this zone. The thing is, we were actually quite just a touch below that resistance zone at 77.46. So you do expect when you, especially on currencies, if you're just below those resistance zone, the market wants to roll over. A lot of the times they'll wash it out or at least test it, just to squeeze out those last remaining traders, and even drag in a few long positions that think it's going to blast through it, and then turn around and just rinse them back out again. So that's what actually ended up playing out, but this was the key level of this overall trend higher. It's been broken at 76.68, but because it's actually this trend higher is still roughly holding, what we could be seeing, you can see that extended move down. A lot of the times it will do that. Again, if there's any form of support or resistance around that the market can go to that's so close, what it's really doing is just a fake breakout, or anyone that's going to short this market when it's especially when it's extended into that zone. You can see pretty much from that 46 level down to 68, it's extended without a pullback, and it's just washed it out. Would have probably been, I'm guessing, either a few stops triggered there and maybe a few short positions when it had this move, and it's easy. It's going to bring in those short traders just for more fuel potentially to roll up again and head higher, but we'll have to see how that plays out. But I think there's probably a fair bit of work to do before we start holding it as a major higher low. Maybe something like this price action, we've had that push up, maybe a bit of price action like this where we just do a bit of consolidation around that 76.68 and then pop our head back up again on our way potentially through 77.46, just to keep the pressure on and continually squeeze those short traders. So that was the idea behind that. If we just go back a bit, you'll see that market it's looking quite good. So it's actually quite a nice little area for a potential higher low to build here, and just drag in a few traders and just wash them back out again on a move high. But we'll have to see how that goes. Now the next one, we've looked at a couple of others. We looked at the euro, which is going quite well. It's pretty much the same basis as short squeeze, and we mentioned that in the last video. You can go through and look at those on YouTube. Looking for a short squeeze. That's played out beautifully. I don't know exactly what it looks like at the moment, but you can check on the charts. Just go watch the video. It's only a 5-minute video. And what else do we do? The pound is finished at the moment, and I think the Aussie yen. We went through the Aussie yen. It did play out. It started playing out quite well, and to what we thought, a bit of a short squeeze again. But then it just found a bit of resistance, a minor level, and then just started rolling over from there. It did consolidate for a while, so it gave us bit of a heads up either to get out, take a small bit of profit, or it had more than enough opportunity to lock in something at least, or just minimise any losses if you got in a bit late. But you can see that on the video. But the other one we started looking at yesterday, we were talking about yesterday, is what do we got? The US yen. And what we're looking at this, you can see this market has been holding. It's been holding between pretty much 115.42 and 111 up until last night, 111.64. And you can see the price action. It's got a lower high here. It's got maybe a major double bottom, and as it's pushed up, it's probably dragged in because of that double bottom. And we haven't got a serious extension lower. As you can see back here, it's quite volatile. Bit of volatility coming out. It's worked its way higher. Come back and made a double bottom. You probably find that there, and we do know that there's quite a few long positions built up. And the market started heading back up to retest those highs around the 115 mark, 115.50. And then it started heading south again. It started holding lower highs and working its way lower. So at that stage down here, we knew that quite a few long positions built up. So I think it's, from what we see, about 70 to 75% longs compared to shorts. So you know that there's more than enough fuel for this continued move lower. I guess got that right, except for the fact that didn't quite get the setup. I would rather have seen a bit of a bounce off here, maybe a bit of a flush out, and then last night a bit of a bounce and build that lower high, or some deeper correction, make a major lower high, and then roll over and really start putting the squeeze on, because that would have dragged in a fair few more long positions, thinking the US dollar is going to rally or the yen depreciate, and then roll over from there. But what it's done, you can actually see it's kept going lower, getting a bit extended. So this is, if you can go down to your lower time frames and you're looking for a bit of a short trade on this, I think potentially ideal. You've got that extension through that support, bit of a pullback on the hourly, and we're coming back in. It's potentially just retesting that breakout zone. You might get a few longer term long traders that think this is just a washout and are buying it back up again, expecting it to have either a deep correction, or it's going to rally up through 115. But it is getting well extended at that zone just up here, so I'll be very tentative about buying anything around here, but potentially could be a short setup for a move back down and through 110. We'll see how it goes. All right, any questions on that, guys? Just wanted to go through those. Is anyone interested in FX? Because we're actually going to start, like I probably mentioned, we're getting into it more and more. Really, the theory behind price action and price structure is the same across the board. Any market you look at, sometimes it's a lot cleaner, and sometimes it takes a bit more experience just to see the intricacies of each market. But we are getting more and more into FX, especially with the TradeSetup, the app we got going there. We're looking at it more, doing a few more alerts for people that can trade it. That's great, that are interested in it. If you're not, it's not so bad. It's always good just to look at the price action that we're looking at. Anyway, anyone got some stocks they want to, we'll get into that now. Whack them into chat. If there's anything you want to look at, or anything you're questioning on what we're doing, just don't give me too many hard questions. So S32, South 32s, I think it's back to where we got in. It's popped back up again today. That had a bit of a big washout yesterday, big rollover. AMPs, is that the weekly? Yeah, the weekly, isn't it? You can see AMP. If you like, I can go through AMP, just looking at why we think it's a good short. Well, why we think it's got some good potential. I'll just click over FBR. That's not a biggie, but I think it looks great. Let's start. I mean, that weekly doesn't look like anything. You can see where it's come from back 2005-06. So it's been a lot higher. Don't know anything about this company, to be honest. I haven't really looked at it. It's just the price action I'm really interested in. You can see it's actually, obviously sold off. It's come down. And a lot of time the markets do that. They either, if it's a relatively new company, let's just see. I don't know if this is all the data. Relative new, it might float. Whether it's euphoria, people, it's up at $25, so that's been actually hammered. So when it comes on, with whatever reason, a lot of times they do have a bit of a run up, especially when they're floated at 25 cents or so, something quite low. People buy into the story is actually okay, especially with the mining stocks, and they take off. They always have that big run up, and then pretty much they spend the rest of the time. It might take 6 months or so. Then they could spend years doing nothing. It looks like this is what this stock is doing anyway. Just looking at the weekly, if you just drill down a bit, so while the weekly's starting to look good, you can see it's had that push down here in 2013, had a bit of a run up. Couple of good weeks. I don't know what's happened there, whether they have some news. Let's actually just see what they do. So mobile robotic technology that will improve the speed, accuracy and safety of global brick construction industry. Well, interesting. If anyone knows anything about this, please feel free to put it in the chat. Then you've had, after that, bit of a pop-up, bit of a pullback. But what it's starting to do, you can see that this just here, say from 2015, mid-2015, it's had a really narrow range. And then you can see that there's a bit more, or a little less volatility. You can see this is a bit whippy, quite gappy, and it's spent some days or weeks doing absolutely nothing. It looks like now, if we can probably click it over to volume as well. That's not the one. Just want to go back to the week. Yes, it's probably a bit more consistent. Well, not really. It's a bit more consistent volume. A couple of big days here. But that was getting held, and it was held around that 2 cent mark, and then it had a big push up to 16 cents or so just recently. If we go back to the daily, what I do like, taking into account this potentially has got a great look to it on the weekly chart for a potential higher low. You can see it's held a higher low just in here around 2 cents, had a big push up off that level for whatever reason. Contraction, consolidation and pullback, whatever you want to call it, down to about 8. And this is showing some good signs of potentially holding this level as a major higher low on the weekly basis. And you couple that with what we're seeing on the daily too, I think there's some really good potential in this. It said contraction lower, a higher low just in here, and it's washed out this recent lower high with this pop up here to 12 cents, potentially holding another high low just below around 9.5 to 10 cents. And it could just be oscillating between there, but I think there's a key level through 12 at the moment. If it gets up through 12, I think that's confirmation these high lows are more of the beginnings of a move up rather than just a high low, because that's a key level at 12. If it gets to 12 and starts rolling over lower highs, okay, we could have a deeper correction on the weekly basis and head lower. But if we can see a little pop up above there and then a pullback even and build some inside high lows, then okay, we'll be happy to have a nibble at that one. But we'll see how that one goes. But it looks good. Anyone know anything about that or any questions on that there, guys? Okay, I just want to make sure that stream is loud and clear. Just checking there. Right, anything else you want to take a look at while we're going? AJM has been an absolute grinding market. You can see that looks great. AJM, it looks good for a nice little 15 to 16, holding a high low and taking out that 19 mark, which it could be really nice. We may have been a tad early on that one, getting in here, because really just looking at the weekly, actually just draw it up. FBR could work, couldn't it? Did I just mention FBR? I'm bloody hopeless. My memory's like a sieve some days. Yeah. Let's just go back to that daily. Yeah, look, that's where have you got your risk there, Clint? Just so I can see what you're aiming at. No qualms with this one, because what you're trying to do, and what, there's nothing wrong with doing that, is front running that break of 12. I only just cottoned on this today. I didn't see it previously. If you've been watching this for a while, that's great. What you want to see, actually, that contraction down, that's a key when it's taken out that, and you can see the moves down, and they're getting bought up. They're not savage. It started off quite savage. You can see that big red candle, pops back up, struggles, rolls over again. It doesn't take out the low by very much, and then straight away pops back up quite a bit. So comparison to, if that was a weak market, it shouldn't pop up. We talk about 1/3 to 2/3, 8.3. No, perfect, just below that low, I'm guessing. Yeah, good, just below that low is actually quite nice, because if you're proven, the thing is, if you get touched on that, even if you got it 8.2, 8.1, if you get tagged on it, yeah, obviously you're going to be wrong. And when you're wrong, you want to limit your losses. So it's good by putting it below there. They've got the market's got to come and prove you wrong, right? And that's what you always want to do. You don't want to be stopped out of something, washed out of something, and then see the market go on without you. So I think it's very important to, if you can, if people like that, is trading off levels, trading off high lows. So the market, if it's going to prove you wrong, it's got to come and get you. All right, not, like I said, if it does. It's always good if you get stopped out here and it rolls over. That's great, but there's going to be a lot of times when it pull back. If you have your stop above the most recent high or low, say somewhere at 9, it could touch 9, stop you out and go. And you see this thing run up to 30 or so, and you're just sitting there shaking your head. You never want to see that happen. Obviously, there's a problem if it touches down at 8, 8.1. There's probably going to be a problem with this price action. We may be seeing a deeper correction. Then you can always have another nab at, another go at it too. So that looks good, and that's great, Clement. And by the way, mate, I got your message. Thank you very much. I really appreciate it. Yeah, no, I think it's the ideal way to. We've got on our results. I don't know if anyone's been taking note of our results so far. The biggest problem with those results is that we are using pivot. We're not taking into account size. It's pretty much every trade's allocated the same size, and sometimes you have to have actually quite a big stop on it compared to some others. So I think there's a couple of good sized losses on there. There've been quite a few percent. I don't know, 5, 10% or so, which you generally, even if it's 10%, you probably wouldn't outlay that much. If you understand what I'm saying. So your risk is going to be similar on every trade, not your outlay, if that makes sense. So if it's always regards, say you're always using a 10 grand position, then there's times when you're going to take a bigger hit if you trade it correctly, in my opinion, by using your pivot points. You're going to take a bigger hit, but if you always have your risk sized up, like you always want to, risk $1,000 and that's it, up to, and then your position size goes up to 10 grand, for instance, and you're only risking 10, then that way you can at least adjust your position size accordingly. So when you do take a bit of a hit, which is always going to happen, a good size hit, it's not too big comparison to your portfolio, if that's making sense. Let's look at the other one, AJM. I was just going to roll over on that one. I think we're at that stage now, and it looks like there's definitely some pressure on this market. It looks like every time buyers are stepping in, there's someone selling it, and whether it's robotic, I don't know, because it's not a heavily traded stock, and a lot of the times they do that, they put pressure on it, and it just brings in anyone that's been buying it. They get out, they run for the hills, whatever, but they can easily put pressure on it. So what we're looking at on this one, I did it once more. Let me just get this up. All right. So the only problem I'm seeing with this one, it's still roughly, it could still be holding contraction as the market, well, let's just take it off, maybe just grinding its way lower. So we've got our stop at, because the trade idea was this one here, is that it's going to just putting a stop below that low, and we bought at 18, and it's just really stopped when it hit 19. It's been grinding lower. Potentially would love to see this this little support zone hold up at 15.5, and then just to get, if we can get a pop up through 17, I think this could be on. It could be good. Otherwise, we could get wiped out if it pushes back down to 14. Still holding that trend, still holding contraction. Just means we might have to take another go when there's a cleaner setup. But at the moment, it hasn't done much on this, and it is quite low on the trading volume. Oh, it's probably a bit cleaner looking at that that support zone through there. So yeah, we'll see how it goes. But that's one that I think it could do well. I actually still think that could hold if a bit more work through here, and rather than actually contracting, it just goes sideways, and then the support resistance comes in, if that makes sense. You can see my hands coming in together to a point where it's going to have to break out, and then you might get, if that's the case and it holds these high lows, then we might get a nice little push up, especially if it gets up through that 19 zone and just kicks up really strong and really start to accelerate like that. That's ideally what we want to see after this, contraction, lower, but still holding these higher lows like this type of price action, then bang straight up through, and then you just get that acceleration higher. Alrighty. What else we got here? That's good. CCL still going quite nicely. Oh, quite a bit of data missing there. Alright, so that's still going quite nicely. I think, it's holding higher lows on Coke, and it's looking good. It actually just today, looking at that now, if it can get up through that 50, what is that high? 51, what's the high today? 52. If it can sort of finish up above there, I think that could really start getting a bit of a push higher and take out those highs on its way to 11. $11 is what we're looking for just at the moment. Now I don't think we're taking a partial on this one at all. So if it gets to 11, it's a major resistance. We probably will be looking at some sort of partial, and that's roughly here. And I think there's going to be a reaction off that level. If we get up there, you can see that's probably a bit clear. If we can get up there, then great. We'll take a bit of a partial there and just see what happens from there. Locked in a div on that one, so it actually, we're up on the trade itself from 36 to 49. It's been a tough one because it gapped up on us. And we've got the div as well, so all looking good on Coke. Just trying to think what else we got here. Oh, no, wrong one. Yeah, South 32 still, you can see that's contracting in, and I expect that to hold because of this move up here. It might be hard to see. Sorry, it's probably a bit hard to see on a smaller chart there. South 32, it's this move up here that just took out this little lower high, and it's touched up on this one here. That's looking good, especially after got this high low here. So maybe a bit of contraction before we get too much of a kick on. But I think that's definitely that, especially that big washout down to 240, and that's really strong move back up towards 290. I think that's going to drag in some buyers, and that's going to continue on up. Anything else you want to look at, guys? Might have a bit of a short and sweet session today. Westpac. Ooh. Now, let me just see whether I think we're out of that one. 33.50, if I remember, was our exit on that. 33.25, so we're still in. Would like to see a bit of a pop up on Westpac. So either way, we've locked in a gain on that. Wouldn't have minded it being a bit better than that, a bit nicer. Let me check out GDI. Will do. Yep. All right. What's your view on that thing, Clement? Is it property, or what's your view on interest rates? Only because I'm looking to buy. I want some advice. Oh, seriously, I am actually looking to buy soon. We've just sold a unit, so we're looking to buy a home for the family. Sorry, I'm daydreaming there. My view is, especially with CBA, don't forget they got a massive mortgage portfolio. So any sort of rate rise they can get is always going to add. It's a property management company, okay. Okay. So it's more property management than property itself. It'd be interesting to see. I don't think there's any rate rises on the cards. Even people are talking up more rate cuts. I don't know about rate cuts as such. I don't think the CPI has actually been okay. It's moved to the top end of the scale more than the bottom end. There's no need to. You're not going to cut rates if CPI is actually within their target range of 2 to 3%. Bugger. So you reckon another 2 years? I reckon if, from what I've read and what I learned, I know if you raise rates, it's going to put pressure on it because there's always going to be people caught out that have just over leveraged, and especially now. There would have been people a while ago when we had that first little mini boom, and then it's gone on with it quite a bit harder. So any sort of rate rise, and then look, RBA doesn't have to raise rates for the banks to actually raise rates. We've seen it, I think, just in the past, wasn't it? So I think any rate rise is going to cause a few issues, and it's going to at least cool it down a bit because what you can borrow, you get less bang for your buck at higher rates. It's going to put pressure on the people that are over leveraged. Obviously, being a boom, and everyone knows it's the main thing that's on everyone's cards the last year or so is when's it going to stop, especially my cards. There's so much inventories coming out. I think the biggest thing everyone's going after at the moment is property because it's just getting more and more unobtainable is the word I'm looking for. So, it'd be interesting to see how it plays out. To be honest, no one ever knows. It's like trying to pick a stock. It's a lot harder because you're talking in years, not weeks or days. It's been such a big bull run, I guess. So it'd be interesting to see how it goes. Hopefully it cools down a bit for my sake. But last thing from my trading background, last thing I want to do is buy at the highs and then get stuck in it for a few years. So that's why we're just sort of sitting around trying to decide what to do. But CDI, enough of my rambling. Okay, it's quite clear there's a bit of a resistance zone through 97, 98. You can see that by, I won't draw it up. You can see it's sort of opened up. Is that everything? Yep, that's everything. So it's opened up, it's pulled back to this zone, it's 84. Had a bit of a push up, took out the highs, and then contracted back to retest those lows, and it just sort of oscillated for a couple of years through there. And it's got major support around 83. This is on their weekly, don't forget. And then we've had that recent move up, probably hot property and all that sort of stuff, up to $1. Bit of a pullback, and still was holding higher lows on the weekly. It's had the extension through $1 to $1.56, 5.5. So if we just look at that most recent price action, it's definitely on the move up now. It's broken out of that weekly contraction, and you can see it even paused when it got through those highs around 98, say. It paused and it oscillated. And this is what we talk about quite a bit. When it breaks through the highs, pulls back, but any of the bears, it's not pulling back, and it just holds those highs. That's going to drag in buyers. People are expecting to say a pullback to 90. They're okay, I'll buy at 90 or 88 or so. A deeper correction, we'll get a better price. When it doesn't do that, generally they're the ones that will be chasing the tails when it starts taking off again. This is when they start feeling the pressure. Go, hang on a second, it's just breaking through $1. We popped up through $1 through here. I'm expecting to pull back. It's not. It's holding higher lows. It's looking really good. It's this most recent extension from $1 to $1.05. It's rejected that quite quickly too. So, but it's all adds to the evidence this market's heading higher, holding higher lows. So really nothing wrong with that. What I'd be doing is really sitting slowly on the sidelines, just wanting to see it hold this breakout. Again, it's a bit of the same. So anyone that's probably missed that little pop up or caught it a bit late or whatever, they might be feeling a bit, if you bought it at 105, feeling a bit strange because they'll be underwater now, just hoping that it holds. And if it holds there, you'll get a few other people buying. If not, especially if you bought it late, a few days later, you probably just want to. They might just be easing out of that position because that could be a big washout. But for me, holding those high lows, it looks actually really nice, especially after this pop up to $1 pullback, consolidated between 94 and $1, but still the whole time it was building those high lows. Popped its head up, looks really good. Just wanted to see a bit more work with more evidence of buyers stepping in. Maybe a fair few days up its sleeves, something like this. That little pop up, a few days holding another high low, say around $1.01, $1.02. A few days like this, just consolidating through there, and then looking for just a buy with a break because that sort of acceleration is really nice. This is not. You can see this is not quite as hard. People are expecting that not to get through $1. It just did. pulled back in, but then you got some strong consolidation. Acceleration higher, and that's because of this high, that initial break, and people who are waiting for this to have a deeper correction are just not getting it, and they've just given up and just, got a bit impatient, whatever, and didn't want to miss the boat, and they've just chased it up, and then that's obviously a bit of a pullback, so you might get that secondary acceleration high, and that's what you'd be looking for from there. All right, does that make sense there, Clement? Paul, Sid, let's take a look at Sid. Yeah, this is one we just mentioned this one, didn't we? Just recently. The one, off the daily, I like it. It looks okay off the daily. It's just the weekly that's getting me, where you've got it. And this is where, buying and holding just doesn't work for me. I don't believe in it. In times like this, if you think, oh, that looks good, I'll buy and hold it. It could, pop up, retest 670, say, this little high, and then just roll over and have a massive, because it has gone up, since 2012. Consolidated a bit through 2010-11, and it's had a nice little, it's been quite a controlled run up too. Higher highs, higher lows, higher highs, all the way up to mid last year. And this is the first major correction we've had. If this is the case and we actually are building that higher, a major higher low, great, because then you're targeting through 750, through those highs into new highs. But if not, if the market needs to take a deeper correction, this is where buying and holding doesn't work. You've got to have an exit strategy. Not really off the weekly as such, but this is where, I'm just concerned that I just want to be nimble. If I'm going to jump into this off the daily charts, I just want to be nimble on the, because of the weekly chart having such a good run up. I don't know if this is just going to pop up and then roll over and then just wash out these lows and have a deeper correction. Then it's going to spend a lot of time. Don't forget when it's on the weekly. No worries, Paul. I was wondering where you were, mate. So whether it's going to have a deeper correction, just remember, because it's a weekly chart, if it's going to be a deeper correction, it's probably going to spend a lot of time doing nothing or consolidating. And again, like we said before, you do not want to be sitting in a position for months and months and months and months doing nothing when you could make much better use of your capital. I'd much rather be out on the sidelines reassessing it. If I have to give up a bit of profit for it, I don't care, because it's all about probability. And if it goes through those lows, there's a higher probability it's a deeper correction, and a high probability it's going to spend some time. I'd rather be out and just sitting and watching it. But in saying all that, just remember this daily chart. That's looking, I don't mind it. The key level still is right up at 660, say, this little high. From the weekly, it's had that push up. It's come back down and retested those lows at 580, and it's starting to work its way off with a high low around 6 off that as well. Now, this one here, I still think it's got to do a bit of work, and it is, if we go back to a different chart, it is overextended just at the moment to the top side or to the upside, whatever you want to say. Doesn't mean it can have a good little pullback. All the selling gets soaked up and build another higher low on the weekly basis. And that, in that respect, if it spends a bit of time doing that, I'll probably be happy to jump in on a daily basis and get a little entry set up on the daily. I know exactly, say for instance, something like this. We just go to something like this kind of setup. You can see it's pulled back, it's popped up, pulled back, and it's just retesting it. And that's really a higher low at 95 compared to the longer term higher low at 580. So that's an inside high low. Generally, the inside high lows lead to at least a takeout of the most recent lower high, which is just up here at 630, which has done that. So an entry through here would have been ideal. Off there, your risk, you know where you're going to put your risk below there. Below 595, and then away you go. You've got at least something up your sleeve, and you can lock in a small gain at the very minimum. We are getting a bit extended, so I'd like to see that pull back. And if you get this type of price action again, build an inside high low. What that could do, because it's the second high low, it's a good sign to any buyers, potential buyers out there, that this thing's holding up, and it's potentially going to make another run. So what you're seeing is maybe the emphasis going from selling and slowly moving on to the bias of buying, if that makes sense, because you've got that secondary high low in here. Initially, this is the first one. You've got a retest here. That's your first sign. Pop up, builds a high low. That's your second sign. And if we pop up, contract back, and that's selling soaked up again, we build another high low. Okay, that could lead to some more, faster acceleration higher, or a breakthrough that 660, and then it could be off. It could be wrong. It could just go bang straight through there now. Who knows? But just at the moment, like I said before, I don't like to buy too much when the market's in extended to the upside. I think the probability is not on my side at that respect. Does that make sense there, Paul? TCL. All right, let's just go back a step. Now, TCL, for me, is a bit along the same lines. It's had that good, solid run up. Okay, so you just got to bear that in mind. It's had a good, and this is the first real major correction we've got. Mid last year to the end of last year, towards the end of last year, and we popped up back off there. Now, this doesn't mean that we're heading higher. Don't forget that type of, and I'll draw that up just to say what I'm clear. So just bear in mind that we've had a good run up. All right. What I don't like to see, and this is what, I've done it again, haven't I? Yeah, goose. What I don't like to see is, once I get it. All right. Okay, we've got a double top up there. You've got a sort of a fair serious level down there. You can see that the market's contracted lower, held a little high low, probably even squeezed in on itself, and then started rallying again. Double top up here, which generally leads to a bit of a sell-off. Now, the fact that it's gone, it hasn't just gone through and then popped back up and started building again. It's just gone bang, straight down. And that's quite, it's a fairly savage move down from $12.50 down to $9.50, $3. And then the way it's come off, don't forget this is a weekly chart, the way it's just gone bang straight back up again. I don't think for me, it's not really conducive to a strong market. Even though it's going up quite strong, it's really that initial buying, and probably because, maybe the sellers, you don't know, they're waiting to sell at a higher level. But that type of move, when it just goes bang and rejects it straight away and starts building without really retesting the lows. So what I would really have liked to seen is this market pop back up, maybe sellers entered back in again and get a major higher low. All right, that type of setup. So that means that there's a fair bit of selling coming out of the market. I don't think there's been, because of the run up to on the weekly, there hasn't been enough selling for me just coming out of the market to make me want to jump in there. And just, now I'll bear that in mind when we look at quickly the daily. And you can see the daily's just gone, washed out quite severe, popped straight back up. And there's still a bit of volatility in that. And I know it's edging its way higher. There's a key level up towards that 11.50, 11.45 mark just in here. It's edging up there. We may get a double. That might just retest there and then start rolling over, a more major rollover, and retest down towards 9.50. I don't know, but just looking at that price action, coming off a double top, quite a good strong move lower, all the way down to sort of that support zone that we're talking around the 9.30-40 mark. And it's really just reacting off there on the weekly basis, reacting. I would more likely see that a nice little push down, more buyers stepping in at that level, soaking it up. But I reckon this is more opportunistic because, don't forget, people trade from their memory as well. And their memory saying that this thing's, let's just go back to the weekly, sorry. It's had a good run up. So, this thing's just going to go higher. So they've just taken this opportunity, bang, it's going to go higher. It's going to go through 12.50. That's what the theory is. But you can see this 11.50 zone is actually, if you just go back to that, well, that didn't quite work, did it? Well, 11.50 is in here anyway. It's getting overextended on the weekly. You can see that, overextended the upside on the weekly. So really that, to me, is saying it's running out of steam. This move up is running out of steam. So you've got to bear that in mind. The daily was starting to head up there too. Even a bit of divergence, however you want to look at it. We're starting to get extended on the daily as well, and that's all sort of coinciding with that 11.50. So for me, I'd ideally want to see a more of a major pullback. Like I said, potentially something like this, but from this level, I want to see a bit of a pullback. So, all right, we've had that, we've had a good push down, and we're starting to edge away higher. That's not, that type of price action like that is not very good for me for a buyer's opportunity. I tend to think of that as being, I'm buying at the tail end of a move higher. I'd rather see that if we're going to get that pop up to that level, 11.50, I'd want to see a rollover, and it'll probably be quite severe, and then start holding up, well, start potentially holding up at one of these support zones, whether it's here or down here, just holding up, and then you can see that we're starting to then, well, you can see we're potentially holding a higher low in here, and that's going to be much better price action to buy off, because you can see that's a major higher low. That could get out a bit more selling out of the market, put a few of these buyers on the sideline, and then I think it's going to have to do a fair bit of work still. But I think the signs for me just to buy is just not there just yet anyway. Is that, will it run? Yeah. All right. Long story short, I think it's going to be struggling around 11.50 anyway. If you've got anything here, this is what let's just go back. I just want to take, just to drill down, if you're long, I don't want to say what to do or what not to do, but if you're, it depends. If you've got a position in this one, and say you bought it in here, great. If you bought it in here, great. I'd be really starting to tighten up my exit. You know that it's going to probably be, we're starting to get extended up 11.50. I don't like those kind of trades. If I was long, I'd be really tightening up my stops, tighten up my exit. I wouldn't just hold it and hope for the best. Be really trying to tighten that up. Probably below that level. It hasn't got another level there. It looks like it's going to extend into 11.50, and potentially it's going to extend into it, pull back. If it's going to roll over, you probably get an opportunity with a lower high, and that way you can really start to lock in a bit more gains. It might be up here, and then just see if it can push down and just get that acceleration to the downside. And it might just pull up in here somewhere. We don't know. Does that make sense there, Wayne? All right, PRG, onto that. I hope that helps anyway. Let's get a bit more. All right. PRG, and sometimes I've got to remember my background's into futures and FX and stuff, so that there's less likely you're going to go to zero anyway. But stocks tend to, even though it looks, this for me looks like a bit of a short more than anything else. See, just on the monthly, you got that double acceleration down, retested $1, washed it out, and it's just sort of contracting back. The MAs are down. It's got this lower high in here, say just around 225. It's better on the weekly. So that's the high. It's pushed down. Savage selling, contraction low. That's not really good, ideal price action for buyers. And it started holding a lower high in here and really accelerated down to $1. It's contracting back up, and that's maybe opportunistic buying. Who knows? It's still holding. And then this little move down here, which has taken out some of this. If that's making sense to you, I'm just trying to explain it in a nice way. That didn't work, did it? So really trying to drill down this last price action. That there, for this market to continue higher, this is a key level. Say through $1.50, thereabouts. It's washed that out. So for me, if that's the case, generally this is going to become a lower high. You're looking for that, maybe become a lower high. So I think for me, I wouldn't be too happy with this one, to be honest. I'd want to just see if we can draw it up. So just remembering it's struggling up here. It's potentially struggling just through here. It's touched up there. Just see how it's, okay, it can't get through, so it's had a deep correction. It's pushed back up, so it's trying to go through from a deeper correction. And it's really starting to struggle around $1.95, and it's even having to pull back off that level. Now it's gone back up, so this could easily be a higher low and go back up. But for me, if it starts rolling over and takes out $1.70, I'd be concerned it's going to at least go back down and test $1.30, even all the way back down to $1. Those support zones down there. If we just, there is obviously, we could easily do it. It's just all the longer term charts don't look good to me either. Just say this is that $1.95 through here, okay? We've pushed up into it. We've had a little nibble, tried to go, try a third time in here. we can just say, just from a slightly deeper correction, tried there, we can't get through. Okay, so the market has to put, so selling's coming in there, okay? Just remember, if it's pulled back, it's that third time lucky can't get through, and it starts rolling over, sellers coming in a bit stronger. So there's maybe people who are boarded in here are not happy. They're not getting the price action that they want to see. It's had a deeper correction. Sellers are starting to take control. It is starting to hold up just in here. So potentially you've got buyers are stepping in a little bit lower and maybe happy to step in there. And they pushed it back up to retest again. Now, obviously there's two ways we can go. If this just starts holding it and the same type of price action builds that through here and then starts building a little inside higher low, that could probably take us up and through. Or this thing's just going to roll over again, probably roll over quite strong because it's just going to run out of steam. And then you'll see sellers who didn't get out here potentially to lock in a profit. It's going and struggling again. Maybe it's struggling again here. They might be viewing this as like, I've had enough. I've really just had enough. I'm just going to take either I'm going to take it on the chin and take a loss, or I'm going to lock some small gains in because I thought this thing was going to do this, just go straight up and through, straight up to 250. If you're smart enough, you realised you're wrong, and they could be bailing, and that could take us down through, these lows at $1.70. So either way, I don't like it just yet. I'd rather see pop up through and then maybe a bit of consolidation around there and then have a nibble at it so you know exactly where your risk is going to be, and see if it can actually push up to 250 and through, because potentially that, if it does break up like this could easily take us through that high at 250, even towards $3. Does that make sense there? So really, you've got to just wait, plan out your trade. Just what we're doing here, plan out your scenarios, what you want to see. If you don't see it, stay out. If you do see it, have a go, because things are starting to line up. Look, if it doesn't line up, if you don't see what you want to see, go on to something else. We said that a few times in the past. Just move into something else. There's more than enough stocks out there. So always trade from your probability. Don't trade from your ego, I guess. I'm not saying that anyone's doing that, but just I've been known to do that quite a bit. Let my ego stand in the way. I don't like to be wrong. It's a bit of a nature, a bit of a curse to me. Anyway, we'll call it quits there, guys. If there's nothing else to chat about, we'll knock it on the head there. The market, since we've been talking, has picked up about 10 to 15 points or so. It was just up over 20 a minute ago, so we'll see how this plays out, see if it actually can. Let's just go down to the 30-minute chart. See, we're probably really just getting reaction off those lows, so it'll be interesting to see, especially after that savage open yesterday and sell-off yesterday into the close. A great weekend. I hope you've enjoyed yourself. And like I said, if you do like what you see today, if you've, just leave us a like or even leave us a comment if you want. And if you've got any questions, any further questions you either want to keep private, anything at all, just send it through to support@tradesetup.com.au, and we're more than happy to answer. Or if there's something you don't mind sharing with others, then we can put it into the next stream. So all right, guys, thank you very much. Have a great weekend. We'll speak to you soon.